Well, hot damn. I'll tell you something. I'm sick. Sick and tired of this inflation bullshit. Okay, no, I'm also sick. So it's really not desirable to be awake right now. But this is like, today could be like the worst day ever or the greatest day ever or nothing could happen. So you have to be awake for it. Anyway, in 4 minutes, CPI data comes out. Consumer price index inflationary data. There's a lot of negativity around this. I would say most people, this is just a guess, but I would say 80% of people are probably like, this is going to be a poop show. This is going to be terrible. But I also think there's like this 20% hope that it finally starts coming down more than expected. Remember, no economist thinks that this headline number is going to come in lower than 7.8%. The media, and please write this down. If caffeine kicking in, dude, I haven't had a sip. Oh, I should. Anyway, write these numbers down so you're ready. Month over month, the expectation is the survey is 0.2. That's for headline, which is not that great because honestly, it's kind of on the low side. And we've seen energy costs go back up. All right. If you go to core, we're expecting 0.4, core 4, okay, core 0.4, and headline of 8.1. So we'll see what happens. But boy, we're going to watch the reaction as well after we come back on not only what's going on in the crypto market, but stock market, obviously. Right now, it looks like crypto, if we take a look at BTC, in the last 7 days, BTC is down like 7%. It's sitting at 18.7 right now. And I think there's some optimism. You've got the NASDAQ and futures up about nearly 1%. So Tesla up about 0.5% here in pre-market futures. But I'll tell you, folks are pretty tired of this market. But I don't think that's a surprise. So this is our day chart. This is Webull, by the way. If you want to get up to 12 free stocks, make sure you go to mettkevin.com/Webull. But anyway, I mean, let's just go ahead and draw a new fib while we wait the 2 minutes here for our data to come out. Because we don't have one right now, because I deleted it again, because it got worse again. We hit a new bottom. So quick note, what you can do is you could hit this little cogwheel and you could actually make this very exact. If you're going to do TA, you may as well have it be as close as possible. Here we go. I don't know. It's kind of remarkable, but that's kind of scary that the triple bounce that originally was thought of as potentially a bottom marker, Feb 24, March 8, around March 14th, and then temporarily around late April, and the bounce, that's crazy, and the bounce over here. All of it kind of aligns with this fib curve so far, with the exception of some of the movements over here. Crazy. Who would have thought that what was the 0% Fibonacci would end up being the 38.2? That's just sad. Very disappointing. But hey, I mean, it looks good. So we'll see what happens. The data today will either solidify the bottom, do nothing, or crash the market. All right, so we're 30 seconds away. We're going to look at the actual report. I'm going to give you the data pretty freaking fast. My goal is to beat any TV station that you're possibly watching. All right, here we go. 10 seconds. Should be it. All right, we're going to start with, what do you got? Year over year. Remember, your survey is 8. Okay, it comes in high, 8.2. Month over month match. Month over month comes in high. Instead of 0.2, we got 0.4. Core comes in high, 0.6 instead of 0.4. Damn it. Year over year core comes in at 6.6. Every measure missed. Slightly bad. Yeah, it sucks. Okay, see how the market's reacting. Holy shisa. The NASDAQ literally went from plus 1% to down 2% in literally, I mean, like a second. Holy crap. Yeah, look at that. This sucks. So this basically guarantees a 75 basis point hike from the Fed. The NASDAQ's, the last time we had a bad CPI report, this, the S&P fell 5% on the day. I mean, it was terrible. It just got worse and worse and worse throughout the day. Obviously, we're like the survey, the estimates are still like the economists are still getting it wrong. It's so bad. Oh, geez, man. All right, let's go ahead and go through the actual documents. But this is bad. So if you're just now joining, everything missed slightly to the upside. That also basically means our headline inflation moved like a whole zero. Now, well, actually, it moved 0.1. So it's like, really? In 1 month, headline inflation moved 0.1 to the downside? The Fed's going to be pissed. I'm going to be so mad. Like, what they're doing is literally changing inflation by effectively zero. It's so bad. Wow. Okay. Let's go ahead then and jump into the actual report and try to get to the bottom of what some of this dirtiness is. But that's not good. Again, everything missed to the upside. Things that were green are now not. All right. So let me also see what other information I can get from the suits here. This sucks. Consumer price index rose 0.4% in September after rising 0.1% in August. Oh yeah. Jeez, man. Oh yeah. Sorry. I'm so sick of inflation. Anyway, okay. Crude futures actually fall a little bit. NASDAQ down 3%. Inflation in September ran unexpectedly hot, including core inflation. This reinforces that the Fed will raise 75 basis points, right? Well, I mean, that was one of the first things I said. All right, everybody's kind of reading the report right now, so let's do so as well. All right, so what happened? Food increased 0.8% in September. Let's see here. These are just sort of our headline categories here. Here's September. These are seasonally adjusted month-over-month figures. Food, 0.8%. That's not great. That's actually 9.6% inflation if you think about it. And Pepsi yesterday was still talking about their purchasing power or pricing power. And sure enough, that's what they got. You actually had a decline in energy, gasoline, fuel. These things all dropped around 4.7, 4.9, 2.7%. Energy services, though, up 1.1%. That's not great. Apparel down 0.3%. Used cars and trucks down 1.1%. The dealerships are having a hard time right now. New vehicles, though. Geez, man. You're still at 8.4% annualized inflation on new vehicles. Sucks. Oh man. Services, less energy services, 0.8%. So broad-based inflation, 0.7% on shelter. That sucks. So this is service. This is a very important number right here. Services without what is it without energy? Okay, I thought it might have been without energy and shelter, but it's just services without energy. 0.8% for services without energy. Absolutely horrible. It tells you that like you're literally seeing this inflation broaden out to everything. This is really bad. 0.8%. Are you serious? Transportation services, medical services. How? How are medical services up 1%? Our transportation services up 1.9%. This is insane. And those are month over month numbers, right? So you can annualize them by multiplying by 12. Now, the good news is this high CPI report, it will actually be cheered for people waiting for their cost of living adjustment for Social Security, which tends to look at the September year-over-year CPI. So I suppose there's some silver lining for certain individuals. Let me get the entire chart here. Okay, now this is also worth noting. This is the last inflation report before the election, before the midterm elections. So this is some bad news for Democrats. They're not going to be happy about this one. Wow. You know, I don't know that you could say it's companies being greedy. The way you have to look at it is, you know, when you're an executive, you have a responsibility to your shareholders, and your shareholders want to see margin going up. They want to, or at least being stable, right? They don't want to see you losing money. And if your costs are going up and you can raise prices, then it's your duty as an executive of a company to raise prices. It's your job, you know? So it's hard to say, oh, it's greed. I mean, sure, that's obviously ultimately what it comes down to. It's like, well, people want more money, specifically the stock market. But then again, you look at the stock market's been just reamed all year. So it's like you can't really blame people, you know. Anyway, all right, let's go dive into some of these numbers here. Let's just see specific categories. So, all right, we're gonna look at the far right column. This is going to give us the seasonally adjusted month-over-month change. Meat's up 0.4%. Eggs up 1.6%. What? Oh, no, sorry. That was frozen fish and seafood. Eggs are down 3.5%. Okay, yeah, eggs have been exploding. Eggs have gotten so expensive. It's insane. Apples are up 5% month-over-month. Dude, like, this just shows you. I mean, chewing gum is up 2% month-over-month. There's nothing saying inflation is trending down. Like, it's so bad. Outdoor equipment and supplies up 1.1% in the month. This is so bad. Tools and hardware, 1.2%. Apparel, fine, great, down 1.3%. So clothing's down. Footwear's down 0.5%. Jewelry up 4.4%. It's insane. New vehicles, 0.7%. New cars up 0.8%. New trucks up 0.6%. You've got vehicle parts and equipment other than tires, 1.9%. This is just so bad. Newspapers and magazines down 2.4%. All right. Computers, really? Seriously? Computers, peripherals, and smart home assistants up 1.8%. Like, everybody was just talking about how the PC market was getting screwed. Alcoholic beverages away from home, up 0.5%. Jeez. Shelter, 0.7% again. Rent of primary residence ticked up to 0.8%. Owner's equivalent rent, 0.8%. It's terrible. And this is a problem because rent makes up somewhere around 30% of your CPI weight. It's like 32.8%. For PCE, it's a little lower, but rent's a big problem. Car and truck rentals up 2.5%. 1.4% on parking, 2.2% on inner city transportation. Jeez. Remember, these are just month-over-month figures. Like, we're not actually seeing a really big fall in many things. I mean, admission to sporting events down 2.9%, fine. But everything else is just getting more expensive. Even delivery services up 2.9%. What the hell? This is so bad. Funeral expenses up 0.4%. Apparel services, so like tailoring, up 5%. All right, let me see what the suits are saying. Rent inflation has now risen 18 of the past 19 months. Yeah, great. Okay, interest rate futures are now pricing in a Fed peak. That's up a little bit, 4.65. Swaps are pricing in 4.85. Housing inflation still too hot. Yeah, this is just terrible. All right, let's go look at some of the damage. One of the first things I want to do is I want to see what's going on with those yields. All right, let's see what we got. Oof. Oof. Basically, 10-year, look at that, 4% on the 10-year. Wow. That's crazy. So the 10 years at 4%. Let's look at the 2-year. Oh my gosh, you can get 4.4% on a 2-year right now. Oh, wow. Oh, that's going to be a new peak today. Yep, there it is. It just updated. Look at that. New peak. Peak yields. Ugh. I wonder what this is doing to inflation break-evens too. Let's look at the 1-year treasury. 1-year treasury. 1 year. How about 6 month? Can I get a 6 month? That's okay. I will find it. All right, here we go. 6 month treasury. Just had to do the good old goog. Whoa! Wow! For a 6 month treasury, you could lock in 4.255. Dude, I thought when this was at 4%, it was a steal. Holy smokes! All right, some on Wall Street are suggesting now that there's the potential of actually getting a 100 basis point hike, and because of how broad-based this inflationary report is, some are saying the genie's out of the bottle, so to speak, and you can't put them back in. Yeah, that would be the inflation genie. Anyway, so I guess we may as well delete this Fibonacci curve right here, because 261 is no longer the low, because right now the NASDAQ is actually at about 255. And Tesla's at 209. Wow. Holy smokes. That's like 630. That's our summer low. Pretty sure that was the low we saw in like, yeah, there it is. There it is. Look at that. The summer low was 206, which is really remarkable because, this was during the Shanghai lockdowns. And, Tesla's been killing it since those Shanghai lockdowns. So, I mean, this is like macro. You can't lose faith in the individual companies because of this macro madness. DWAC got added to the Google Play Store and is for some reason up 6%. This is one of those that when it was $100, I went on Newsmax. I know they invited me on their show. They're actually nice. Yeah, they're very nice. And they're like, Kevin, what do you think about DWAC? I'm like, Sean Spicer, it's going back to $10. It's almost back to $10. Oh man, Ape is just straight down. Well, they're getting diluted. I mean, AMC's doing their job. So anyway, wow, this is a disaster. All right, let's see what else the suit's saying. Morgan Stanley tells Bloomberg TV that this was a shock for markets. He adds that he and his team had projected a print like this. If ever there's a time for people who do economic forecasting to be humbled, this is it. Yeah. Well, everything came in hot. Wow. This was a 2.9 standard deviation surprise to the upside, which is roughly as bad as the July surprise. Yoicks. Here's another economist. Rents are still rocketing higher, posing upside risk to our view that owners' equivalent rents and the rent of primary residence measures may peak around 8 to 9% year over year, respectively. See, here's the problem. Okay. Remember, the COLA is going to be 8.7%. That's the cost of living adjustment. Highest in 40 years. Well, I mean, inflation's the highest in 40 years, so that's no surprise. But this is where you have to understand inertial inflation is real. You know, some people like to say, "Oh no, rents are going down. Rents are going down." No, not yet. In some areas, in some boom towns, sure, but nationwide, we are suffering from inertial inflation. People who would have bought homes over the last 6 months are like, "Screw this! I ain't buying a home. I'm renting a home." And so, what ends up happening? Well, they take demand away from homes, so home prices go down, and they add demand to rentals. And that drives rents up, not down. So it's actually a really incredible time to prepare to get into real estate, which is obviously why I think everybody should make sure they join the programs on Building Your Wealth, link down below, by Friday at 11:59 p.m. That's tomorrow, by the way, especially since the lifetime access goes away for some courses, especially the Path to Wealth course. So if you want lifetime access to all the content and lifetime access to the live streams for as long as I do them, which I don't expect to stop them at any point, but at some point I imagine I will. But anyway, if you want lifetime access to those, check out that link down below. But okay, so real estate. Why is this good for real estate? Well, it's not if you own real estate. I mean, these treasury yields are terrible. But I mean, you basically have a situation where the treasury yields are going to crush via mortgage rates, are going to crush buyer purchasing power to such a massive degree that the month's supply of homes available for sale will go up as less people buy. That'll lead to more price drops and more price reductions, ultimately in closed prices, because first prices drop and then things sell for less. At the same time, rents are going up, so it's kind of like an investor's dream. Prices coming down and rents going up. It's amazing. It's just terrible for our society and for our economy. It's really bad. Mohammed Al-Arian. Once again, what does he have to say? Once again, hotter than expected U.S. inflation numbers for both core and headline, and therefore bad news for the Fed and markets, and more importantly, the economy. Well, I mean, that was boring. It's obvious. Okay, so there's another chart that compares August to September, and everything in red that I'm about to show is inflation going up. What I miss? Schiff is loving it. Yeah. Okay, anyway, here you go. Look at this. So this right here puts August next to September. And you could see everything in red. And this is not perfectly aligned, I've noticed. Because here you've got energy in blue, and energy's over here. So it made up a smaller part of the decline. But you got a lot more red over here than you had last time. and red is prices going up. Transportation services getting hit, rent, medical care services, food. It's just bad. The right side is September. Ah, man. Well, at what point does it go from being a buying opportunity to just being hell? Okay. Tampa had the hottest inflation at 10.5%. Oh my gosh. I think this is also, I mean, this is so bad politically. This is your last CPI report before the election. Oopsies. Oh well. All right. NASDAQ seems to be chilling out right around that 255 level. Yeah, I would hate to have some variable rates right now. Jeez. Thank you, Crypto Lifer. Appreciate you. Thanks for joining. Okay. So in case you missed the actual headline numbers, basically CPI month over month was supposed to be 0.2%. It came in at 0.4%. Core was supposed to be 0.4%. It came in at 0.6%. CPI headline was 8.3%. It was supposed to go down to 8.1%. It actually went to 8.2%. CPI, excluding food and energy, so core year over year, went up to 6.6%. The prior release was actually 6.3. The survey was 6.5, and we got 6.6. So everything across the board hot. This is so bad. Would I consider buying if there's a buying opportunity? When Kevin is reconsidering if it's a buying opportunity, it's a buying opportunity. Well. All right. Yeah. Anyway. All right, folks. There you have it. Thanks so much for being here. Check out the programs on Building Your Wealth link down below. One of these days, we'll actually be in a situation where everybody is building their wealth again. That's okay. Now's the time to prepare. Get ready. Oh, mortgage rates. I wouldn't be surprised if mortgage rates, on average, go up to 7.5% now for sure. I mean, I think by some accounts they're already there, but we'll see.